Hello, this is Coach Mike from WinningStockCoach.com. Going to take a look at our market overview for the week ahead. That'll be beginning July 28th, 2014. Going to start out here with the SP 500 chart. If you watched last week's video, we had two really close interim target levels, 1990.09, 1993.76 for the SPX chart. We actually got into, just barely between them, but I would definitely say to an area where we could say the 1990.09 has been hit. We're going to go ahead and remove that from my chart. But you'll also see that as we began to pull back and we formed that top, we were able to come up with a couple interim pullback targets. The first being 1977.25. Friday we came just below that. We're able to close just above it. And just like our last shorter term interim target, I guess we'd say, for the S&P 500, we need to watch the direction on Monday, because if it's up, we need to play with the positive move off of support. Now, if we get that positive move off support, we'll need to watch the 1993.76. I don't think we'll need to watch it very closely, because if it ends up being that target that was the support, the 1977.25, then I'm imagining that 2010.17 would be the high side that returned off of that. The one thing that I want to watch for overall, though, and why it's important to hold the 1977.25 as support, is a little bit of a drop could occur if that's lost to 1963.04. Either of which wouldn't have much of an effect. It sounds like it. Oh wow, that's like 14 bucks. It's not going to hurt most stocks to see that drop from 1977.25 to 1963.04. But what we really want to see is that 1963.04 is held no matter what. The reason I say that, you see a couple trend lines that I had started throwing up on my chart over the past couple months, just trend lines based on the bottom prices that we had seen. And if we were to fail the 1963.04, we would be failing that trend line that had been established since the markets bottomed the first week of February. January was the best pullback we've seen all year, and 6 months later, it's kind of looking like we could be due for one. I don't think it'd be one that would be atrocious to the markets. I'm not going to sit here and say, oh yeah, that'll be where the markets crash. If they did, they did. So be it. If you spend the time to read the charts and plan your trades, you'll have plans already in place for anything, so it wouldn't hurt you. What we need to be looking at, though, is that 1963.04. If that does fail, then I do believe we get the type of pullback that we saw in January. Another thing with that too to understand is last August was actually the biggest pullback we had seen in the market during the summertime. So last August had a big pullback. It literally pulled back the entire month of August. Let me show you. I'm going to go to a 1-year daily chart, and you see we had a little pop up onto August 1st and August 2nd. Then we had the first weekend of August and clear down until, and you see it didn't pop off the bottom until the first trading day of November or September, I'm sorry, was when it popped off the bottom last year. So August, might we have a little bit of a pullback? We kind of need it. It would be hard to say that valuations aren't a little high. This quarter for earnings, so last week was a really big earnings week, and we saw kind of mixed results. We saw some really good beats. We saw some really bad misses. And we saw a lot of ones that were expected to do really well just do kind of average or in line. And the one thing that concerned me the most was how many earnings reports I read that reduced their guidance for either the upcoming quarter or even the upcoming year. When you start to see a reduction in guidance, that's the company telling you that, hey, we don't think we'll do as good as we thought originally. And that's what those guidance numbers are. It's a general guidance to help investors kind of get a baseline of what to expect over the next quarter or year. So just to sum this up really quickly, For the S&P 500, and I spend more time on this chart with the overview because I do believe it's the more important of the indice charts. If we make a positive move up and hold 1977.25, we need to use that as our support / stop out point. That's, if that's lost, that's where you'll watch your stocks, see if they're failing support, and get rid of the ones that are. So long as that holds, I think we've got a target area of $2,010.17 to be watching for. Now let's also remember that my long-term Fibonacci projections, I've had a few of them that we've had to get rid of because they were hit, and ironically where all the long-term ones were hit was when we started getting good-sized pullbacks. We had one hit the 1st of April, we got a good-sized pullback. We had one hit in the first week of January, and we had the greatest pullback that we've had since last August. So when we watch that overall, what we really want to focus on is, even though there's some craziness that might happen, consolidation, a few pops out of it, every time that we hit one of those long-term Fibonacci targets I had was when we actually had a decent pullback. So we do still have to look at that number, but that's also the last of all my long-term Fibonacci targets. After 2027.03, I really don't have a high side target on the S&P 500. I couldn't find a single one. So that means any trading that happens above there, I don't expect to be very safe. I'd expect to be kind of rocky, and we'd have to establish targets later on. But if we hold the 1977.25, we're going to look at first for 2010.17. If we lose 1963.04, we're probably going to expect the type of pullback we had in January of 2014. Going to move over now to the DJI, that's the Dow Jones Industrial Average. Talk about a couple target areas we had on this one, the 17,209.51. Now we didn't quite get up into it, but we haven't really pulled back from it either. One thing to look at that's kind of been funny, in all these consolidation periods, and this is the weekly chart, I just have it broken down to a 2-year weekly. What you're seeing here, green week, red week, green week, red week, green week, red week, green week, red week, with a slow upwards progression. Now, each time that we've been able to make that slower upwards progression, we held the high of the prior consolidation area. What that means is, we held the top of it, basically. You see, we had this 4 week of green week, red week, green week, red week. If we put a line across the highest close, as we broke out of it this week and the next week had a red week, at the close of the week, we closed right at that line. The next week, a green week that popped above, and this past week, a red week that actually closed just above the value of that line. We closed at 16,960.57 for the week, and 16,947.08 is that higher close area. We do still have a few targets north of where we are right now. The 17,209, we may be able to look back at that in a bit and say, well, we came pretty close to that. 50 points off of it. When you're talking 17,000 and something, 50 points isn't anything. But we do have that overall long-term target that could be reached at 17,934.86. Now, the only thing that makes me skeptical about that is in reading some of the earnings on some of the DJI stocks, I was not very happy. Visa's earnings Thursday were kind of, it wasn't just a miss. I think that if you really dig into that report, you'll see that the largest stock in the Dow Jones Industrial Average isn't doing very good. And it didn't leave a lot of high hopes for next quarter, at least in my opinion. So that kind of makes me skeptical. Now, I want to switch this down to the daily chart. I'm just going to go to a 6-month daily so you can see it a little easier. You see that a couple of these high points that we had hit before, kind of in line with where that swing point was from our weekly. And I did have a shorter term Fibonacci target of 16,960.27, and we closed Friday 16,960.57. So just above it after kind of dipping below it, but able to close above it. And that's what really matters, the closing price. So if we were to stay positive or move positive on Monday, I think we'd have a good buying opportunity for longs, but we need to use really that horizontal line I have from the weekly chart as our support level. And we still have to focus on that 17,209.51 target area. Now, a target area is just kind of a general area to watch for. I never expected my targets to be exact. I don't claim to be, doing as such with that. I use them as general areas to watch. But what I don't want to do is I don't want to close the week. I don't really care what happens during the week. I don't want to close the week below that weekly swing point, this horizontal line. If we close below that, I don't even think it'll be the 16,757.35 that holds us. Again, I think you'd see it on the SP 500 for what I talked about with the XPX chart, and we could see somewhere around 15,904. So we'll have to see as this one progresses and put out a few updates on that. But for right now, we closed above support, and if we make a positive move, we have to be willing to buy off support. If you're not willing to buy off support, then you've missed the entire run the S&P 500 and the Dow Jones Industrial Average and every stock within them has made over the past 5 years because you didn't trust the stock market. So don't be afraid to make a buy on a positive move from support, so long as you know that support also indicates your stop out should it be lost. And a couple weeks ago, we actually hit perfectly into our target area that we'd been covering for since May area. We got right into that target area on the Russell 2000 is where we're at now, the small cap index, RUT. Anyway, as we began this pullback, we started watching two critical areas, 1083.26, and then also what would have been the 50% retracement from the move that we made, and that's going to be this line that just popped up on your chart. Now you see we had actually failed below that for a day and quickly came above it. So it didn't really bother me that we were below it for that day or two. What bothered me is that we came back below it on Friday's close. So what I want to be watching for on the Russell 2000 that I think would have the higher probability right now is based on my daily chart and not my weekly chart. I want to watch this 1125.53. 1125.53 is a simple marking off this little bump ups high, this low, and this high on Thursday of last week. So if we were to make a further downside move, I'm interested in seeing if it's around that 1125.53. The reason is that would be another sequential lower low on the daily chart, and at which point I would look for the next bounce up to be the opportunity to go short on small caps to this 1083.26 target area in the Russell 2000. Finally, we're going to move over to the COMP. Looking at the comp daily chart, this is our Nasdaq Composite chart. Some of the better earnings were within the technology stocks in the Nasdaq. Apple, Facebook did well. Saw a few others, but anyway, an interesting pattern here, and I know members of the coaches roster are going to see this because we talk about it a lot, this W pattern. Now, with this W pattern, I'm going to mark my highest close within the W, and you can see what a W pattern is. It goes down, up in the middle, to a lower high, but then double bottoms on the next down move, and then makes the breakout towards the top side. Now there's two places to buy a W: when it breaks out and when it retraces and holds the center of the W. So again, just like some of our other indice charts, what we're looking at is a very important juncture here. Just like the other indice charts I talked about that are right at their support areas. On Monday, we have to look for either support to hold or support to fall or fail. If support fails, we've got one other support area fairly close, 43.85.81 on the comp chart. We also have from our weekly chart, this was the swing high that we had talked about a few weeks ago when we discussed the Nasdaq charts to be the bigger momentum plays, and that was as it retested here and then made the momentum play, and we saw big momentum plays with several stocks that we trade regularly and several higher profile stocks. But if we fail our W point, we want to first watch this 43.85.81. It's a reasonable target calculated with our Fibonacci's, and we want to watch our weekly swing point here. If that fails, just like I was talking about with the SP 500 and the Dow Jones Industrial Average, if they fail those interim support areas that are coming up or that they're at right now, we're probably going to see the type of pullback we saw in January. And that's where I would expect the Nasdaq Composite to hit 40.95.25. That'd be the area I'd be looking at if that swing point fails. So that's what we'll be watching. So it's a very, very, very important week in the markets this week, because starting out Monday, we know stocks only move 3 different directions: up, down, and sideways. And a down move from where we are right now will be a support failure, albeit possibly an interim support level, will be a support failure. Many people set stops based on supports. Many people that don't even use stops watch supports, and they're disciplined enough to sell if support is lost. If you haven't noticed, stocks go down faster than they go up. And if a support is failed, we could expect, even if it's just a day-long move like we've seen over the past few weeks, where we got a big down day, but it was only a day or two long, we could see that bigger move hit one of our other targets. And on a positive move from those other interim targets, we can't be afraid to go long, because at least over the past few months, seeing it one bad down day or a string of 2 in a row has actually only been the best opportunity to buy that you've been given before the next run. And your worst case scenario on a positive move from a support level is that you get stopped out when it drops below the support. And if you're buying off support and stop on a failure of support, that would mean your risk in the trade is very small. And there's a risk in every trade you make, and you have to be willing to take it. This is Coach Mike from WinningStockCoach.com, wishing you the best of luck in the upcoming trading week. Good luck, and God bless.